Today, I'm going to pull back the curtain on my entire $500,000 investment portfolio at the age of 23 and show you not only what platforms I use to invest my money, but the exact assets and funds that my money is invested in. Let's get started. All right, so the investments that my wife and I currently have are broken down into a few different categories. We have our Roth IRAs, our Roth 401ks, an HSA, which is a health savings account, which some might not consider an investment, but we do have those funds invested in a basic Schwab portfolio, so we'll count it here. And then, of course, we have a miscellaneous investment, which is our business, and by far our largest investment, which we'll save for the end of the video, and I think it's going to surprise a lot of you. All right, so first up is our Roth IRAs. So if you don't know, in the world of IRAs or individual retirement accounts, you typically have a traditional IRA or a Roth IRA. There are a few other options like a SEP IRA, but we won't bring those into this conversation because I want to keep this as simple as possible. So without making your head spin too much, the only difference between a traditional IRA and a Roth IRA is how these accounts are taxed. A Roth IRA is being funded with money that has already been taxed, but it is able to grow and be withdrawn completely tax-free, while a traditional IRA allows you to contribute funds before being taxed, but you will have to pay taxes on that money when you withdraw it in the future. In the case of my wife and I, because we are rather young and expect to make more money later in life, meaning we would probably be in a higher tax bracket, we use a Roth IRA because right now we are hypothetically in a lower tax bracket, meaning it's better to pay the taxes today than it would be, say, 30 or 40 years from now when we hopefully will be in a higher tax bracket. So I've personally been maxing out my Roth IRA since I turned 18, and now I'm 23, and my wife has been doing the same thing for the past several years as well. And as many of you know, I do a majority of my investing through a platform called Wealthfront. And if you want a full breakdown of this platform and why I use it, then I'll reference you to this recent review that I did on this platform. But long story short, it's an automated investing platform. So I just tell it my investing goals, how risky I want my portfolio to be, and Wealthfront then does everything for me. If you want to learn more, I'll leave a link down in the description below where you can get your first $5,000 of investments managed for completely free by Wealthfront. But if we hop into my Wealthfront app and head over to my IRA, you can see that currently there is just shy of $30,000 in this account. And what you may also notice that is honestly gut-wrenching is the fact that my all-time return on this account, despite having invested in it for the past 5 years, is negative 2%. Not an ideal situation, and I definitely need to reevaluate the type of portfolio that I have selected in here. But IRAs have a contribution limit of $6,500 per year currently, so just by fully funding this account for the past 5 years, I have set myself up for future financial success. So if we scroll down, you can see a full percentage breakdown of exactly where my money is invested, which I'll go over in a second. And again, this is something that I should probably rebalance given the portfolio's poor performance over the past 5 years. But if we click into any of these specific asset classes, you can see the exact ETF where my money is being invested. So 33% of this portfolio is invested in the Vanguard Total Stock Market ETF. And if we click into that, you can see the historical performance of this specific fund. And if we scroll down a little bit, you can see all of the detailed information on this fund, including the top 10 holdings. All right, but for those of you who have been waiting for the nerdy specifics of exactly where our money is invested, here's what you've been waiting for. And obviously, not financial advice. You make these decisions on your own. So another 23% of my portfolio is invested in the Vanguard FTSE Developed Markets ETF. 15% is invested in the Vanguard Real Estate ETF. 12% is invested in the Vanguard FTSE Emerging Markets ETF. 9% is invested in the iShares JP Morgan US Dollar Emerging Markets Bond ETF. And the remaining 8% is invested in the iShares iBox Dollar Investment Grade Corporate Bond ETF.
That was a lot.
Also, there's a small percentage that is just sitting on the sidelines in cash. So nothing too out of the box there, and that is definitely a portfolio that you could build on your own. But if we scroll down a little bit further, you can also see all of the dividends that are being automatically reinvested back into my portfolio, not to mention the automated rebalancing and tax loss harvesting, but this video is not meant to be a review on Wealthfront, so again, if you want to see that, check out this video. All right, let's move on to the next category. So I do also have my wife's IRA linked in here, and I can't see the specific details, but she is at the same risk score, which is just how Wealthfront determines what is in your portfolio. So hers is invested in a very similar way. So if we take those two totals and add the $7,300 that is invested in a boring Schwab portfolio from our health savings account, that brings our total to just shy of $55,000. The second category is our Roth 401ks. Now, you're probably familiar with a normal 401k, which is just an employer-sponsored retirement vehicle that oftentimes your employer will contribute to, which is literally just free money, so please, if you do nothing else, take that free money. But similar to having a traditional and Roth IRA, like we just talked about, you can also have a traditional or Roth 401k, depending on what your employer offers. So for the exact same reasons that I described earlier, my wife and I have Roth 401ks through our employers. The 401k provider is typically determined by your employer, and in my case, I think it's a company called Empower. My wife's is some other company, but it doesn't really matter because in the case of our 401k investments, these are just invested in an incredibly boring fund that is called a target date fund, which in our case is the American Funds 2060 Target Date Retirement Fund. And all this means is that they are going to automatically adjust where that money is invested as you get closer to retirement age. And as the name states, the retirement age in our case is 2060, and while I definitely plan to be retired way before that, the way that these target date funds work is, like I said, they'll start off with a more aggressive portfolio, since as a younger individual, you typically can take on more risk because you have more time to recover should something go wrong. And then as you get closer and closer to retirement age, they will typically invest less in stocks and more in things like bonds. So by keeping this as a target date fund for years and years from now, I'm really getting that high risk and hopefully higher return portfolio, which, like I said, I can afford to take on at my age because I am pretty young. So my portfolio is currently at $23,000, while my wife's portfolio is at $32,000 since her employer offers an awesome employee match. So that brings our grand total to about $110,000 so far. But remember that pretty much everything we've covered this far is retirement investments, meaning we cannot touch that money until we are 59 and a half, which is decades and decades away at this point. All right, but we are a long ways away from that $500,000 mark. So before we get to what is by far our largest investment, the miscellaneous category that I do think we have to throw in here is the investment that we continue to make in our business, which is Magnified Money. Now, it's really impossible to put an accurate dollar value on that investment because selling a content business like this is not exactly the easiest thing to do. But this is our largest source of income by far, and instead of paying all of our profits to ourselves from the business, we continue to reinvest a lot of money back into better equipment, hiring team members and contractors, and have also expanded in the past year to be more of a content production company instead of just making the videos that you see on this YouTube channel. So again, kind of impossible to put an accurate number on the huge investment that we continue to make into our business for future growth, but just for the sake of today's video, we will put a very conservative number on it of $200,000 just based on revenue forecasts and the systems and teams that we have built out that we are now using to produce content for other businesses as well. All right, but last but not least, we have by far our largest investment that is actually one that you have been looking at this entire video, and that would be our home. As I've mentioned in previous videos, my wife and I purchased our home about a year ago, and after stacking money to the ceiling for over 2 years, we were blessed to be able to put down a 6-figure deposit, and since purchasing this house about a year ago, we've been paying it off at a ridiculous 5-year amortization schedule, despite having a 15-year mortgage. Basically, what all of that equates to is, despite only being in this house for a year, we've already built up about $200,000 in equity that if we sold this house today would be cash in the bank. But as long as we live here, obviously we get a beautiful place to live and somewhere to run our business out of, which we do get certain tax deductions for. But depending on where the real estate market heads in the next 10 years, which most of us would probably agree will be higher 10 years from now, this is by far our largest investment in terms of a dollar figure. So our more traditional investment total is only $110,000 in different retirement investing and miscellaneous accounts. But if we take our total portfolio, including all of those alternative forms of investments that we are putting money into every single month, and of course not including any liquid cash that we have on the sidelines, this brings our grand total investment portfolio to just north of $500,000 at the age of 23. Now, I'm sure many of you have some thoughts and opinions on what we included in that total tally, or you just want to roast me for my embarrassing portfolio performance over the past 5 years. So I'd love to know your thoughts on this down in the comment section below, and what platforms or tools you are using to manage your finances for future growth. Again, if you want to check out some of our favorite financial tools, including Wealthfront, where we invest all of our money, and SoFi, where we transact and track all of our money, I'll leave some links for both of those down in the description below. But as always, thank you so much for your time. Take it easy, and I'll see you in the next one.